They say, why is Forex traded in lot? Many people ask me this question all the times, like why do people trade Forex in lot? Lot is just a unit in which, or it's just the measurement in which Forex trading is being traded. So let's Forex is traded in lot because you can't just buy one unit of a currency. Remember, let's just take this, right? Where we have different currencies. If I'm trading Forex, there is no way I can open my chart. I can go on my chart and I just buy one unit like this. And I just buy $1. Although this is let's just assume this is $1. There's no way I can just go on my chart and I just buy $1. I need to buy it in terms of lot. Let's take this example. All right. Anytime you go to a supermarket, if you go to a supermarket and you want to buy an egg or you want to buy eggs, there is no way you're just going to enter the supermarket and you just buy one egg, or you just take one egg and you move out. You will buy the eggs in terms of lot. In terms of lot, or you buy the eggs in terms of lot, or in terms of trays. So this in this case, this lot is in terms of 30 units. Let's just call it 30 units of eggs. Now I'm calling it 30 units because you are buying a lot of this, a lot, L-O-T. So you are buying a lot, all right? So that I don't get confused. So here you are buying a lot of this eggs, which that particular lot is equal to 30 eggs. All right, 30x is equal to one lot. So in this case, our standard lot, when it comes to this, our standard lot will be equal to 30x. That's just the best example I can give in this case, because you can't just enter the supermarket and you just pick just one egg. You need to buy it in terms of lot. The same thing applies for trading. Applies for trading. In trading, you trade Forex in terms of lot, because there is no way you're just going to go on your chart and you buy just one unit or just $1. So you trade Forex in terms of lot. And by trading Forex in terms of lot, you have something like this. Anytime for you to be able to buy 100 or 100,000 units of any base currency, it is called, you use what they call a standard lot. All right. So 100,000. So 100,000. This is actually 10,000. All right. This is actually $10,000. This is $10,000. So $10,000 will fall under a mini lot. All right. So $10,000 fall under a mini lot. So for me to be able to buy this, to buy the United States dollar, no matter any other currency which I'm using to exchange into United States dollar, whether I'm exchanging the Euro, USD, Japanese dollar, USD, or any other currency pair, if I want to buy 10,000 units of the United States dollar, I'll use what they call a mini lot. So a mini lot is equal to 10,000 units. 10,000 units of the United States dollar, right? So, and if I want to buy 100,000 units, I'll use what they call a standard lot. So a standard lot is equal to 100,000 units of the base currency. And if I don't have enough money, and I just need to buy 1,000 of it, I just need to buy $1,000, which is just going to be 10. I just need 10 of this, right? I don't have enough money. What I'll buy a micro lot. And that micro lot, if on my trading platform, I'll use 0.01, which is the micro lot. Or if you want to buy, which is the macro lot, if you want to buy a mini lot, you use 0.1. Or if you want to buy a standard lot of the base currency, you use 1. All right. So that is why Forex trading is traded in lot, because you can't just open your chart and you just buy $1. You just buy 1 unit of that base currency. No, you need to. Forex trading is traded globally, and since it is an industry that has almost about 6 trillion transactions per day, it is traded in terms of lot. You have a lot of 100,000 units, 10,000 units, which is the mini lot, and 1,000 units, which is the micro lot. So that is the reason why Forex trading is traded in lot. So with that being said, they say, what is the margin trading? What is margin trading? Remember, I explained to you that, okay, because the Forex market is the biggest market in the whole world, and since it is traded in lot, it means if you want to buy a standard lot, which is 100,000, let's just explain this. If you want to buy a standard lot, which is 100,000 units of a base currency, for you to use a lot size, let me just put this. For you to use a lot size of 1, you need how much? You need at least $100,000. For you to just to open your MT4 and you use a lot size of 1, you need at least $100,000. And just for you to use a lot size of 0.01, you need at least $10,000 in your account. And for you to use a lot size of 0.01, which is the micro lot, you need at least a $1,000 account. But even at this, remember, if you make a profit here, if you are using 0.01 and the market just go up by 1 pip, you make 0.1 cent. All right, 0.1 cent. And here, if the market just go up by 1 pip, you make plus $1. And here, if the market go up by 1 pip, you make plus $10. So you see the profit here, the profit margin. If you are trading without leverage. After this, we are driving to what we call leverage. So you see, if you are trading without leverage, it means for you to be, you need a higher amount. You need a higher amount. Here you need at least $100,000. Many people, an average person can deposit $100,000 into the trading account. An average person can deposit $10,000 into the trading account. Maybe some people can afford to deposit $1,000. But with that, to allow people to open bigger positions in trading, they do what they call margin trading or leverage. So they bring leverage into place. And leverage when it comes to trading is the ability of using the broker's money. So that your broker is able to borrow you money. To actually trade as if you are having a bigger account. So with that borrow money, you'll be able to open bigger positions. So let's take an example. Let's just assume in the first scenario which I explained to you, if you are trading without leverage, it means, let me go here. If you are trading without leverage, it means if you have a $1,000 account, you'll be trading. The highest you can open will be a mini lot. You can only use a mini lot, or you can only use a micro lot if you have if you are trading without leverage, right? You have a leverage of 1:1. If you have $1,000 in your account, there's nothing. It hasn't been multiplied, it hasn't been leveraged by any particular amount. So the highest you can open will be a micro lot. All right, but now let's just assume your broker, most brokers will give you a leverage of 1:500. So you have a $1,000 account and your broker gives you a leverage of 1:500. So what they will do is they'll multiply what you have in your account times 500. So you'll be trading as if you have $500,000. So with $500,000, instead of having the micro lot as the maximum you can open, you can even open up to, remember, you have 500,000. You have 500,000 in your trading account, and the least you need to be able to open a standard lot is 100,000. So you can even open 5 times 1 standard lot. So you can even open 5 standard lots. All right, you can even open 5 standard lot. So you see, with the ability of what they call margin trading, you can then open bigger positions. You can open bigger lot sizes, which will allow you to make bigger profit. Because if you are trading without leverage, any small movement that happens in the market, your profit margin is very, very small. Your profit margin is very small. But now you have to be very careful, because leveraging in Forex is a two-way sword. All right? Leveraging in Forex is a two-way sword. If you are still starting, you need to be very careful with leverage, because if you over-leverage your account when you are still starting with trading and the market goes against you by just, remember with a $1,000 account, I said if your broker actually gave you a leverage of 1:500, means you are having 500,000 in your account, meaning you can even use 5 standard lot. The trade will still open. And for 5 standard lot, it means each pip that happens in the market, you either gain or lose 50. You either gain or you lose 50 pips. All right, you either gain or lose 50 pips, and you have just $1,000 in your account. So if the market just goes against you by just 50 times 50 times 50 is 25. You see, so if the market just goes against you by 20 pips, just 20 pips against you, your account will be blown off, because you are over leveraging. 1 pip here is $50. 50 either go up or down, you either gain or lose $50. So if the market just goes against you by just 20 pips, your entire account will be negative. You'll be negative. So your account will go to 0. So you only be able to use maximum leverage. You should only leverage when you've already have experience when it comes to forex trading, because it is a two-way sword. With that being said, we've come to the end of this particular video. So on this video, we've covered what will allow you to make this decision to either buy or sell a particular currency. We've also explained to you why forex trading is traded in lot, and we've also explained to you what is meant by leveraging or margin trading. So with that being said, we've come to the end of this video. If you've enjoyed the video, or if you've gained some value from this video, please leave a thumb up on the video. It means a lot for YouTube algorithm. It also enable many people to be able to see this video. So if you've gained some knowledge, please leave a thumb up on the video. And if you are watching and you haven't subscribed, please subscribe to the channel, and also follow, there's a playlist here. Also follow this playlist so that you can be able to watch all the other courses on the playlist and go along as we update the playlist. Until then, I'll be able to see you guys on another video. Peace.